Hey there, it's Ron with Insurance for Texans, and today we're actually going to talk about health insurance. I know we spend a lot of time on home insurance, life insurance, but today we're going to hit a topic because we have received a lot of phone calls in our office here over the last month of people looking for alternative ways to obtain health insurance because they claim they don't ever go to the doctor, but they just want to make sure that they're protected in case something goes horribly wrong. So the question becomes, does catastrophic health insurance still exist in the state of Texas? And the answer is unequivocally yes, it does still exist in the state of Texas. Let's rewind and we'll talk about how we got to here before we actually talk about catastrophic health insurance. So if you go back to a time before HMOs, PPOs, and the Affordable Care Act, a lot of us lived in small towns. We went to the same family doctor for most of our lives. I mean, I grew up that way in a small town, going to see the same doc that my brother and sister went to. My parents saw him, as did the rest of the town. We paid the doctor directly for the care that we received during that office visit. It worked great. The doctor made a comfortable living. He was well respected. The town loved it. We all had a great customer experience because we took care of one another, and the costs were reasonable and manageable. So what happened? Where did that go? Well, if you go back into the 80s, the HMOs were invented. The health systems decided, we can insure people, we can pull the hospitals in, we can pull the doctors in, we can provide this whole system of care, and we can do it in a more cost-effective fashion. So people got put into these organizations, a health management organization. You went to the same doctor, but they now had to refer you. He became the gatekeeper. Well, cost escalated, they skyrocketed, and the insurance companies, the health system companies went, wait a minute, this doesn't work. And we fast forward to the 90s and we see the invention of the PPO. People were tired of being stuck inside their network. They may have wanted to go see a doctor over here, doctor over there. They got dinged with those crazy costs when they went out of network. Sometimes they weren't approved to have the things done. The PPO allowed more freedom. And with the PPO came copays for you to visit your doctor. So instead of paying the full cost of that visit, you paid them $15. The doctor got reimbursed what they were agreed to by the PPO network. It allowed them to contract with multiple networks so that they could see a wider swath of patients. But as we progressed through, the costs began to escalate. The costs that were paid for hospitalizations, they grew. You know the story. It got out of hand. The copays continued to increase. The deductibles continued to increase. And we saw the premiums continue to increase. And it became this spiraling escalation, which brought us all the way forward to the Affordable Care Act. So we moved from a model where we paid cash directly to the doctor that we saw, and we carried insurance for big things like we do on our homes and our cars. And the Affordable Care Act turned it all on its head after we got into the insanity. We're not here to debate whether the Affordable Care Act was good or bad. It existed, and what we saw was the invention of the healthcare exchange because people with pre-existing conditions still needed insurance. That came with its own set of problems. There are minimum essential components that are involved in those plans, and we saw the premiums grow and grow and grow, and people became frustrated. Then we said, you know what? Maybe we could go back to paying cash to doctors and only carry insurance for big stuff. And we remembered this thing called catastrophic health insurance. And so that's where the questions are coming from. So how does catastrophic health insurance work now that it's coming back in vogue? It's primarily made of three components. The first is a critical illness policy. The second is an accident policy. And the third is a hospital indemnity policy. Those three policies work in tandem with one another to provide you financial protection if things go horribly wrong with your health. The critical illness is going to cover things like strokes, heart attacks, cancer. There is a list of conditions that they will take care of once they occur, you're diagnosed with them. It could be a gastrointestinal issue. It's going to cover hospital cost. It's going to cover follow-up with those specialists after it's been diagnosed. The second piece is an accident. So let's say you're out skiing, you break your leg, you need surgery, you have to be transported by ambulance, it requires rehab. It's going to take care of that big giant bill. The third piece is the hospital indemnity plan. That is going to put money back into your pocket when you're in the hospital or you have that surgery, and it will help cover coinsurance, deductibles, out-of-pocket costs that you may not have thought of. They work together to provide you financial protection when the proverbial health stuff hits the fan. It's actually true insurance. Claims are paid, so you're not paying out of pocket. You're back billing after the claim has been settled. Any amount due will be your responsibility. It's how we used to operate when we paid cash directly to our primary care doc. It's been a wonderful companion to direct primary care, where you have a personal relationship with your doctor and they take care of the vast majority of things that you need. It's a great plan for people in the right situation. I'm Ron. If you like this information, make sure you subscribe to our YouTube channel, because there's more just like it coming behind it. If we can be of help, let us know. Leave us a comment if you've got a question, if you love it. Thanks for tuning in. Yes, catastrophic health insurance does exist in Texas.